Hi everyone, JJ here with The Art of Value. Welcome. Well, Tesla Q3 2023 earnings, what a disaster. At least some people said that. Dan Ives, Tesla analyst from Wedbush, certainly did on a clip, and we'll have a look at that. And then we'll get into the Q3 presentation from Tesla and then some of the earnings call. This is actually from a live stream. I did an hour-and-a-half live stream. I've condensed it down to some highlights. I hope you enjoy this episode. I certainly enjoyed doing this very first live stream, and I'll be doing more of them. Just one thing to note, the first clip with Dan Ives is a little bit echoey, but it does clear up, so I apologize for that. Let's get into it.
Dan Ives, Wedbush securities analyst, does cut his target to 310. He was at 350, but keeps the outperform rating. Dan, it's great to have you.
Hey, great to
Thanks
be
for
here.
coming in. What about it made you say that?
I mean, if you looked up disaster in the dictionary, there'd be a video of last night's conference call. And I think the problem is that the street wanted to get details. Have the price cuts ended? Where's the gross margin outlook? What does demand ultimately look into 2024? And instead, it was really Musk put on his macroeconomist sort of hat. And that's not what the street wanted. I think it was lack of details. And ultimately, it was a somber note for, especially when it looks at Cybertruck and you look at the margin outlook. And I think the long-term thesis is still there. But with no rose-colored glasses, I mean, this was definitely what I'd call a disaster.
Would you expect anything different from a guy who runs a company whose goods are 90% financed?
But Carl, I think the big issue was really around the price cuts, because as you've seen the price cuts, there was a view that it would start to end by this point. And ultimately, by having the door open, and also by losing your CFO, that was, I think, a huge part of the credibility.
CFO's gone, and the earnings call is interesting to listen to because it's a new CFO. Seems a little bit unsure, or at least it's been commented on that Elon seems to be surrounded by people who basically say yes to him, who won't sort of argue with him or won't disagree with him, and that's possibly not a good situation to be in, even though you can understand how that's the case when he's the Steve Jobs type of character, or the extraordinary entrepreneur who's going to say no to whatever he says.
Investors came off that call last night. I can tell you, institutionally speaking, just a lot more questions, no answers. And I think that's really the frustration, and that's why you're seeing the stock under almost extra pressure because of that head-scratcher conference call last night.
Dan, you're one of the biggest bulls on the street. You come here all the time and then talked up Tesla for years, correctly so in many ways. I'm glad you're here on a bad day, too, but what did you get wrong here?
I think what we got wrong in the short term was the price cuts were going to end. And you knew the poker move of the price cuts.
So the price cuts here, is it going to end here? It could be more. So margins have gone down. How low could they go here? They're sort of approaching auto industry margins. This is not a software company margins, which Elon talks about on the call. It's definitely auto margins. They're selling autos.
This year has paid off massively. And I think that's really sure from a demand perspective. But that really 95% of the price cuts, I believe, are done. I thought Musk would have put the line in the sand, maybe a few more price cuts, then we're over. Instead, by leaving the door open, I think the communication is maybe what we underestimate even from Musk. By not putting a line in the sand, that's the frustration here.
Yeah, more price cuts to come in the future. You can see that. Elon talked about affordability, that he wants it to be affordable for people. He talked about that a lot. He talked about interest rates and how people just can't afford it. They've got to be affordable. He said that right from the beginning. If you look at Tesla, he's always wanted to accelerate EVs, the advent of EVs in society, and the way to do that is to make affordable cars. He's always said that, and that's what they're doing. But to do that, it's going down to margins that definitely aren't tech company margins. So at some point we look at the market cap and say, is this a company that can have this market cap when they've got low margins? Yes, they're selling a lot of cars, but they don't really have much else at the moment going on, so it's all future value.
Now it's a Pandora's box, and you can't put the genie back in the bottle.
But how can you put a line in the sand on price cuts when we see the 10-year yield and the 30-year yield move up every single day to new highs? And if that's really what's driving it, how can you know?
Yeah, and it's a great question. I think it's really about the price cuts in China. And if you look what's happened there, even BYD and some others have started to soften some of the price cuts.
BYD. So not many people mentioned BYD. I noticed a lot of Tesla people do not mention BYD, but they're selling almost as many cars as Tesla. Soon to be, maybe in this next quarter, just as many. And not just their hybrids or their ICE cars, but no, they're selling just as many fully electric cars. And They are cheap. I notice where I am. I'm not in the US. I'm in New Zealand. I've seen them on the streets here. I can understand how they probably won't be big sellers in the US, probably because of that geopolitical situation where will people buy Chinese cars in the US? They might, but because of this rivalry conflict, we could say, between the US and China, I don't see BYD being able to get in. Even I wouldn't see the government even wanting that, so that's a barrier. But in other parts of the world, not so much, like Australia, New Zealand, Europe, they're going to be selling. So they're Tesla's biggest competition, absolutely Tesla's biggest competition, and not many people are even talking about that. And in China, some of these electric cars are cheap, selling for equivalent of 20,000 US. So that's what's happening, and that's where Tesla wants to get to with their big platform, cheap, affordable car. But it's a while away. People were asking, when's that coming? They wouldn't say anything about the timeline for that. It's all focused on the Cybertruck.
Continuing to cut prices, especially in China, that price war, they're actually making worse. And I think that's been the biggest thing, because you're talking about 40-50% of overall demand's coming out of China. We believe the long-term story is intact. The sum of the parts thesis, full self-driving, AI, what they're going to invest in. But no doubt in the near term, and because of that conference call, I think you're definitely going to see uncertainty. It's almost an albatross right now that's around that.
Where
stock.
was the operating margin? 7.6%, I think, came in. That's like closer
That's
to
low.
other automakers, right?
Well, yeah, because
That is getting low.
They were in a massive position of strength, come down toward other automakers, and now it comes down to, does this start to stabilize, increase from here? Obviously, software. You could argue FSD is going to be a big piece going forward. Look, we've been here before. We've been through some of these white knuckle periods with Musk, but I would put last night as a top 3, probably worst conference call I've heard from Elon, in the last few years.
Now, if you're getting value out of this video so far and you're watching on YouTube or on X, please remember to hit that like button to help the algorithm to spread it to more people. And now you can go the extra step in showing your appreciation to go here to buy me a coffee. I'll put a link in the description as well. As you'll understand, it takes quite a lot of time to put these videos together each week, so I'd really appreciate that extra show of support if you feel like it. Thanks. Q3 2023 update. Highlights: 7.6% operating margin in Q3, which is really getting low. This is what people is labeling a disaster. These are not tech company margins, are they? Summary: our main objectives remain unchanged in Q3, reducing cost per vehicle, free cash flow generation, whilst maintaining delivery volumes and continued investment in AI and other growth projects. Our costs of goods sold per vehicle decreased to about $37,500. We have implemented necessary upgrades in Q3 to enable further unit cost reductions. So cost reductions there. During a high interest rate environment, we believe focusing on investments in R&D while maintaining positive free cash flow is the right approach. So they talk about a difficult environment. Year to date, the free cash flow reached 2.3 billion. Okay, and they do have quite a bit of cash. We have more than doubled the size of our AI training compute, which Elon mentions in the call. Our humanoid robot is currently being trained for simple tasks. Lastly, with a combined gross profit generation of over 0.5 billion in Q3, our energy generation and storage business and services and other businesses have become meaningful. That's an important sector. There's a graph which is ramping up. I think that'll become important over time. Total automotive revenues year on year, 5%. So we talk about 50% growth year on year. I heard a lot of really bullish Tesla investors saying it's going to grow at 50% for a long time. Elon talked about reaching the law of large numbers. They're kind of approaching that. So 5% is definitely, you can see why the share price went down just because of that. Energy generation and storage revenue up 40%, but it's only 1.5 billion as opposed to 19 billion. So 6 billion for autos and 1.5. So still small, but say if that can grow exponentially, that could become meaningful over time. Elon said that it should be at least the same as autos over time. They've been focusing on autos because that's what they've been selling. And of course, with energy storage, they need a huge number of batteries. So that needs to ramp up too. Getting all the lithium and making the batteries is no small task. Services and other revenue. So that's even more. It's 2.1 billion and 32% growth. So that's meaningful. That's what we want to see. 40% and 32% growth. Those are bright areas, but small revenue really compared to cars. And total revenues equals 9% growth year on year. So it's not a fast growing company when you look at that, if that continues. Total gross profit minus 22%. Income from operations minus 52%. Wow. Operating margin minus 964 BP, 9.64. So these are significant drops, so it's understandable people that it was a disaster. A disaster. Net cash provided from operating activities minus 35. Free cash flow minus 74. So wow. It's a wow. Total revenue grew 9%. Profitability, our operating income decreased year on year 1.8 billion in Q3, resulting in a 7.6 operating margin. Oh, that's getting low year on year. Keeping in mind here that Elon's concerned about a recession, but the Fed's not saying we're in a recession. They're saying we're not going to. But if there is a recession, I mean, I can see Elon's kind of fear of going into recession because they've got these numbers. They're lowering prices. And if there actually is a recession, the auto industry is notoriously cyclical. I mean, look what happened during the global financial crisis. Companies actually went bankrupt, had to get bailed out. And so what would actually happen to Tesla if there was a serious global recession? They're not just selling in the US. US recession is one thing, but if there was something like that, I mean, he's been through it. Now, this is interesting. Their solar business is not going well. Minus 48%. So if you look at these numbers here over time, 94, 100, 67, 66, 49. So these are the quarters. It's going down. Their solar business is not doing well. I wonder if they'll eventually close that up and say it's not worth it, or maybe sell it off. I don't know. They can't sell it off as Tesla branding. Gigafactory Texas, we began pilot production of the Cybertruck, which remains on track for initial deliveries this year. How many deliveries this year was a big question on the earnings call, and I think what they're aiming for there, they've put a delivery date, they've put a flyer out, I think it's the 30th of November. It'd be interesting to go to actually, but I can't go there. I'm a long way away from Texas. At Gigafactory Texas, we begin pilot production of the Cybertruck, which remains on track for initial deliveries this year. We are expecting the Model Y production rate in Texas to grow very gradually from its current level as we ramp additional supply chain. Model Y remained best-selling vehicle of any kind in Europe, so that's pretty significant when you think about this. The heart of Europe, of the European car brands, German cars, for instance. Energy storage, here we go. Energy storage deployments increased by 90% year on year. It's really good to see that. Services and other. See how that was trending, was way down, and now it's turned positive. So this could be really strong for Tesla in the future. Our global fleet size grows. Our services and other businesses continue to grow successfully, and supercharging, insurance, and body shop and part sales being the core drivers of profit growth year on year. See that? As their fleet grows, there'll be more of that. Even when there's robo-taxis, they'll need to be serviced. Who owns the robo-taxis? This is a question for the future. I think Elon's thought it through, but how it works in the real world kind of remains to be seen how that's going to work. Pay-per-use supercharging remains a profitable business, even as we scale capital expenditure. Our team is focused on materially expanding supercharging capacity and further improving capacity management in anticipation of other OEMs joining our network. Services and other could actually be a big business over time, as it kind of is for other big automakers. They'll still need servicing, and there's other things around. Even an app store. What will happen if they release an ad store and people have apps? We'll have to see how that plays out. That could be a profitable business too, and that is software margins. Apple's situation of taking a 30% commission on everything going through the app store, the internet tax. I'm sure Elon's thinking about that. Outlook, volume. We are planning to grow production as quickly as possible in alignment with the 50% CAGR target. Well, they're far off that, aren't they? We began guiding to in early 2021. In some years, we may grow faster and some we may grow slower, depending on a number of factors. For 2023, we expect to remain ahead of the long-term 50% CAGR with around 1.8 million vehicles per year. Cash. We have ample liquidity to further our product roadmap, not like other OEMs which are saddled with debt. So this talks about price inclusive of national and state level subsidies. So it's pointing out how affordable Teslas are becoming. Let's see, where's the cheapest? New Jersey. So if you're in New Jersey, 32,490, and Illinois as well. 36,490 in all other states. That's the Model Y starting price inclusive of national and state level subsidies. So yeah, that's getting affordable. I mean, there's no doubt the price is coming down with subsidies. It's coming to the affordable range, which is what is wanted. To have mass production, be some of the most popular cars in the world, it has to be affordable. Elon says that. It's just that the problem is with margins there. Maybe margins will start going up later on. That's the thesis, that they cut prices so margins are kind of get thinner, and then but over time they get better again. Cybertruck deliveries begin in November 2023. There's a Tesla truck with Cybertrucks loaded on it. Impressive sight in front of the Tesla building. It's a crowd-pleasing photo, isn't it? Right there. The Cybertruck's ready to go. And the 1 millionth Model Y produced in Shanghai there. Alright, so this one's interesting. There's key metrics here. We're looking at the operating margin below the S&P 500 average year-on-year revenue growth. Look at that going down. It's down below 30%. Earnings calls are important to listen to for a company to see how the CEO and the CFO and their team are feeling. You can tell in people's voices, right? You can tell the emotion in their voice.
We will continue to invest significantly in AI development, as this is really the massive game changer. If you have fully autonomous cars at scale and fully autonomous humanoid robots that are truly useful, it's not clear what the limit is.
Okay, so Elon talking there about it's not clear what the limit is. These are things that are way in the future. This is an earnings call from what's happened, and it's his grand vision ahead. So he goes on. Energy storage. So this is the interesting part. We talked about this in the
4 gigawatt hours of energy of storage products in Q3. And as this business grows, the energy division is becoming our highest margin business. Energy and service now contribute over $500 million to quarterly profit. The Cybertruck, I know a lot of people are excited about the Cybertruck. I am too. I've driven the car. It's an amazing product. I do want to emphasize that there will be enormous challenges in reaching volume production with the Cybertruck, and then in making the Cybertruck cash flow positive. This is simply normal.
It's going to take a while to get the Cybertruck positive, cash flow positive.
With a lot of new technology, any new vehicle, brand new vehicle program, but especially one that is as different and advanced as the Cybertruck, you will have problems proportionate to how many new things you're trying to solve at scale. So I just want to emphasize that while I think this is potentially our best product ever, and I think it is our best product ever, it is going to require immense work to reach volume production and be cash flow positive that people can afford.
So he's tempering expectations there. He says about that people are excited about the Cybertruck, but says how difficult it is and to ramp it up. This is one of the reasons that the share price dropped 10%, I think, is because they are launching it, but it's probably going to be small numbers and it's going to be very hard. And there's difficulties, obviously stuff going on behind the scenes. It's been really difficult to get this even built.
That's why I say prototypes are easy, production is hard. People think it's the idea, or you make a prototype. You design a car, and it's not as though designing a car is that just anyone can do it. It does require taste. It does require effort to design a prototype. But the difficulty of going from a prototype to volume production is like 10,000% harder to get to volume production than to make the prototype in the first place. And then it is even harder than that to reach positive cash flow. That is why there have not been new car startups that have been successful for 100 years, apart from Tesla. So, I just want to temper expectations.
There you go.
For Cybertruck. It's a great product, but financially, it will take, a year to 18 months before.
A year to 18 months to ramp up. I mean, people were so excited that it would ramp as quickly as the other models have, but clearly it's going to be difficult.
It is a significant positive cash flow contributor. I wish there was some way for that to be different, but that's my best guess. The demand is off the charts. We have over 1 million people who have reserved the car, so it's not a demand issue, but we have to make it. We need to make it at a price that people can afford.
To make it and price that people can afford is the main thing. So he's definitely tempering expectations here. So let's jump ahead to investor questions.
How many Cybertruck deliveries do you anticipate for 2024?
Here we go.
It's difficult to make an accurate guess at this point. Going back to what I said earlier, that the ramp is going to be extremely difficult. Like I said, there's no way around that. If we just try to do some copycat vehicle design, of which there are literally 200 models that are slight variations on a theme in the combustion engine world, then it's really not that hard. But if you want to do something radical and innovative and something really special like the Cybertruck, it is extremely difficult because there's nothing to copy. You have to invent not just the car, but the way to make the car. Where will things end up? I think we'll end up with roughly 250,000 Cybertrucks a year.
So there you go. He's estimating in 250,000 a year. Could be more than that over time, who knows, or less. But he's saying it's going to be difficult because they have to invent the way of making it. It's a whole new thing. It's going to be fascinating to see these things on the road and to get in one.
But I don't think we're going to reach that output rate next year. We'll probably reach it sometime in 2025.
2025.
That's my best guess.
This is when he basically said that Mexico could be on hold, which really, I think, shocked quite a few people.
Could you please provide an update on capacity expansion plans for companies' factories in Berlin and Austin, and the opening schedule of Gigafactory Mexico?
Berlin and Austin factory, the current priority is actually maximize the output from our existing lines by laser focus on efficiency improvements. As always, maintaining a high quality and reducing per unit cost will be as critical as growing the production volume. For Mexico, we're working on infrastructure and factory design in parallel with the engineering development of the new production that will be manufactured there.
In Mexico, we're laying the groundwork to begin construction and doing all the long lead items. But I think we want to just get a sense for what the global economy is like before we go full tilt on the Mexico factory. I'm worried about the high interest rate environment that we're in. I just can't emphasize enough
about the high interest rate environment.
For the vast majority of people, buying a car is about the monthly payment. And as interest rates rise, the proportion of that monthly payment that is interest increases naturally. If interest rates remain high, or if they go even higher, it's that much harder for people to buy the car. They simply cannot afford it. So
that's true.
And we are tracking, I believe, at this point for Model Y to be the best-selling car on Earth. But not just in revenue, but in unit volume. If you compare that to the other vehicles that are number 2 and number 3 and whatnot, they cost much less than our car. We're just hitting law of large numbers situations here. I know people want us to advertise, and we are advertising. I think there is something to be gained on the advertising front. I don't think it's nothing. Informing people of a car that is great that they cannot afford doesn't really help. That is really the thing that must be solved, is to make the car affordable.
I mean, he's got a good point. Projections are, especially from very bullish Tesla investors, that they're going to make 20 million cars a year. You know, so it's got to be affordable. It just doesn't make sense to have expensive cars. So it is important, but what will margins be like when they do that? Will they go down into normal auto industry margins, which is not what people are expecting, unless they have significant other revenue from, say, software margins from FSD and so forth.
The average person cannot buy it for any amount of money, or they simply can't afford it. They can't afford it. So this is a big deal.
So we're focused on growing our volumes in a very cost-efficient manner.
Yeah, I mean, the risk of stating the obvious, it is not possible to have a compound growth rate of 50% forever, or you will exceed the mass of the known universe. So
that's
but I think we will grow very rapidly.
That's for pointing out the obvious about growth rate of 50%. That's huge. If you're investing and you're getting 50% a year, then you'd end up with a huge amount of money. But, you know, so he's basically saying that we're not going to grow 50%.
Much faster than any other car company on Earth by far.
Just faster than others.
Next question is, do you have an approximate timeline in mind for the robotaxi, driven or non-driven? What excites you most about how this project is progressing?
I guess I'm very excited about our progress with autonomy. The end-to-end, nothing but nets, self-driving software is amazing. Drives me all around Austin with no interventions.
So he's been very optimistic about FSD in the future, you know, saying it should be this year, it should be this year. So listen to what he's saying about what's happening with it really now, apart from it being good.
You know, it's clearly the right move. You know, so it's really pretty amazing.
It's amazing.
And obviously that same software and approach will enable optimists to do useful things, enable optimists to learn how to do things simply by looking. You know, extremely exciting in the long term. As I mentioned before, you know, given that economic output is number of people times productivity, if you no longer have a constraint on people, effectively you've got a humanoid robot that can do as much as you'd like. Your economy is quasi infinite, or infinite for all
So this is quite a bit down the line. This is grand vision. This is what draws people in, of course, is grand vision of what's going to happen. But, quasi-infinite economy, which is something that also Kathy Wood from ARC says all the time, about the growth rate in the future. But, this is not what's happening right now, which is what investors on this call are kind of interested in.
And I don't think anyone's going to do it better than Tesla, not by a long shot.
It's dropped on FSD if
Why is
it
the
is
price
getting
dropped?
better and robotaxi is
What's
expected
the FSD
so
price
soon.
dropped?
Well, we just wanted to make it more affordable. I think over time, the price of FSD will increase proportionate to its value.
They're saying that you want to make it affordable, but it's got to be for the masses. So eventually it's got to be cheap. What would people pay per month for FSD? What would they pay? It's interesting to think about that in the future. Certainly not 10,000, not even 5,000. I mean, per month, what, $100? Like if you think about streaming entertainment, people pay, or internet, if it's that crucial, $100 a month for fast internet, reliable internet. What will you pay for FSD to be driven around?
So I would regard the current price as a kind of a temporary low. It's basically baby AGI.
Baby AGI.
It has to understand reality in order to drive.
Basically baby AGI. AGI for the physical world.
AGI.
That's the hope. And that's kind of part of the valuation too, I think.
Will Optimus be working on Gigafactory lines next year? If so, how many would you guess will be deployed?
Okay, that's a stupid question. I'm sorry. I mean, please, how far away is that?
We learned earlier in the call, it sounds like you don't think the truck will ramp to significant volume. Should we have a similar anticipation for the ramp of the next gen platform, or is there any reason that we should be maybe more optimistic or pessimistic about the ramp profile there?
In terms of like the technologies we're putting into it, we didn't have to invent how to bend full hard stainless steel or have mega 9,000 ton castings or the largest hot stamping in the world.
The simplification makes it easier to automate. It also makes it lower cost. Yeah, it's intrinsically lower cost.
Let's be clear, it'll be cool, but it's utilitarian. It's not meant to fill you with awe and magic. It can get you from A to B. It'll be still beautiful, but it's utilitarian. It's a utility.
Talking about it being the new platform, this new platform car, the cheap one will be a robotaxi, they hope. So utilitarian vehicle. I mean, you think about the VW Beetle, really, how when that was first produced. This is the mass market vehicle. I think some analysts and investors saying, why don't you get on with that? The Cybertruck's going to take a long time to ramp up. But yes, it could be an amazing vehicle, but really to sell 20 million cars a year, they're really going to need something like this next-gen platform. It's a cheap car that sells all over the world and can become a robotaxi. And so that seems quite far off.
Said in the commentary that you're not going full tilt on the plant in Mexico until there's signs that the economy's strong.
Not going full tilt on the Mexico factory. People were concerned about this. It was all like, we're building a factory in Mexico. We're going, full steam ahead. And they're basically, Elon's just concerned about the macro environment and saying we're not going to do that.
Can you continue at a 50% CAGR without that plant? And where would that come from? And any color on what you mean?
Because a lot of investors are, bargaining on this 50% CAGR a year for the indefinitely for the foreseeable future, and he's basically saying it's not going to happen. The law of large numbers, it's too hard to do with metal benders, with building physical products.
You mean sort of not going full tilt? Could that plant get delayed indefinitely, or what are you kind of talking about?
No, we're definitely making the factory in Mexico. We feel very good about that. We put a lot of effort into looking at different locations, and we feel very good about that location. And we are going to build a factory there, and it's going to be great. The question is really just one of timing. There's going to be a broken record on the interest front. It's just the interest rates have to come down. Like if interest rates keep rising, you just fundamentally reduce affordability.
Talking about interest rates there, it's concerned about this macro environment, which is really it's part of what sent the share price down. What if there's a recession? What if we go deep into recession? What then? And we've got high interest rates. I mean, that's when interest rates would come down. But he's basically saying it has to be affordable, and that even though the price of cars are coming down, people are paying about the same amount just because of interest rates, because people are financing their cars. They're not just buying them outright here. Most people just finance their cars. I don't like to do that.
It is just the same as increasing the price of the car. So I just don't have visibility into. If you can tell me what the interest rates are, I can tell you when we should build the factory. We're going to build it, and I mean, I think we'll start the initial phases of construction next year.
Okay, next year.
But I am still somewhat scarred by 2009 when General Motors and Chrysler went bankrupt. Well, that's now 14 years ago. That is seared into my mind with a branding iron. Tesla was just hanging on by a thread during that entire time.
Just talking about this, when Tesla nearly went under and he's sleeping in the factory to keep things going. He's got PTSD from that. And he's saying that if the economic situation gets really bad, he remembers that. So he wants to be pretty cautious. It's one of the few times he's been really cautious rather than sort of really bullish. And he does talk big, but this time he's pulling it back.
A lot of wars going on in the world, obviously, as well. So
really they're talking down Mexico. They're talking down any new factories. They're talking it down, saying that Texas is big and it's been the home base. It's where Elon spends a lot of time, I'm sure, because of Starbase as well.
We're actually only occupying a tiny corner of the land that we have. We could technically do all the scaling necessary just here.
Now, if you're watching this episode on YouTube, I'm going to put a link here to the video that YouTube thinks you should watch next. So go and see that now. And thanks for watching or listening to this one, and I'll see you in the next one.